I know you touched on it slightly there, but I thought we could dive a bit deeper into tokenization and DLT. So yeah, I thought a good place to start would be to just see where the key areas in the industry do we expect that DLT will have the most impact. I'm not sure who wants to take that first.
Well, first of all, I believe there is no consensus. Obviously, DLT has been extremely popular 3 years ago with the emergence of this cryptocurrency business. Mm-hmm. But I would say that last year, that was quite the reverse effect, with obviously bad press articles around massive bankruptcies in the crypto world. So that leads also to a kind of this famous crypto winter and DLT bubble that is now a common language that you find in many articles. But that being said, I still believe that this is a structural trend that will continue. And tokenization, even if it's yet at the beginning, has potentially no limit, right? There is not a single asset that is not qualifying for tokenization. Now the question is always with this type of new technology, yes, fine, but what is exactly the problem that you are trying to solve with tokenization? There is no consensus of which assets should be the priority for tokenization. Should we target, I would say, blue chips, listed equities and national debt versus secondary or private equity type of placement, where by nature, DLT could provide solutions to the settlement friction that is inherent to this illiquid type of market. So the potential is there. Some progress, some would argue that it's still experimental, which is true to a large extent. But we have some areas in the industry. In the collateral management, for example, we have been participated through HQLX to the creation of tokenized collateral basket. With a big interest for clients is that you no longer have to move actually the underlying securities, but just the tokenized version of that high liquid asset. So de facto, with this tokenization process, you eliminate the settlement frictions that you had in your collateral management space. Funds distribution, for example, is another area where we have some material experiments. For example, again, in funds DLT in Luxembourg, we have also now a running predictive platform enabling the distribution of funds via leveraging on those technology. So there is lots of experiment, and every day has its own new experiments. But which I believe is also one of the problem of this emerging technology, is that, and I'm sure that we will come back to that, this the problem of fragmentation of the market. Yeah. That's by nature has been created with this trendy topic, with everybody trying to step in, seeing the potential, and wanting to make sure that they don't miss this train line, if I may say.
Yeah, certainly we'll come back to that. But I first want to get your view as a custodian. Where with DLT are you kind of channeling your investments and plans with the technology?
Well, there's really been quite some successful proof of concept that we have run itself, right? And actually, in the industry, running successful proof of concept doesn't mean it will lead to successful adoption and successful launch in the full industry, because at the end of it, it's not I, me, and myself. The industry has to come together, the clients have to come together to make the DLT pervasive, and then we go to the single source of truth. So, and where I will see that they tend to be a higher success rate, and therefore where we'll be focusing on, is where there are semi-regulators that comes in to encourage the use of DLT itself. Because then you'll be talking about vertical alignments from issuance all the way down to the custody piece itself. And there you will find that the participation rate and the drive towards adoptions is not just a singular party, but the industry at large itself. Yeah. So that place itself would be where we'll look at, like for example, in the markets that we operate will tend to be more in the transfer agency piece itself, because that is really quite concrete. Quite a lot of human resources is actually being used in the space, and that's where I think we will really see the benefits of having a proper DLT that is accepted from the industry perspective and launched industry-wide itself. And then the other one would be from the issuance down to the custodizations, right, on the singular markets perspective. And then again, I have to qualify, right, these are really more of the Asia, AME markets, whereby it's not a singular regulator. So therefore, a vertical DLT construct will have a better success rate.
Yeah. Is that something that you've been able to glean from the kind of responses to these areas, Richard, in the surveys?
Just to some extent, I'd like to say something that may be a little bit controversial, but it's our observation, and that is that the industry, I think the security services industry, is to some extent a victim of its own success. Because if you look back over the past 20 years, a lot of progress has been made in things like straight-through processing and reduction in settlement fails, speeding up of the operations between the different parties. So now when you have a new technology that promises to take you a bit further, the current system isn't broken enough for people to say, we must invest in that now. You know, and that can be a problem. It goes back to something that Yannick said earlier about client expectation versus client readiness. We notice in the surveys, for example, whenever any provider introduces a new technology that's fairly widespread, it takes about 2 years for the results of that to feed through into the survey. And the next year after you've introduced it, there's often a dip.
Yes.
And that's because for clients, you're changing what they have to do on a day-to-day basis. It works okay. They may grumble about this or that, but do they really want to put in the money and the human resources to make a change to get incremental improvement? I don't know.
Yeah. No, that's a very correct statement, and we witness that every day in our discussions. We have a very, I would say, pragmatic approach. For example, in our D7 initiative, where we started to digitize the issuance process, and we have lots of market consultation, client consultations, to be sure that we just not on board into a journey that nobody is interested in. But the reality is that, and I think I say that already, what we see as a kind of incremental effort on our side as a market infrastructure is a huge transformation step. And today, I don't think that we have evidenced enough or materialized enough the benefit, the incentive for the clients to do that jump, that move. And that's something that we need to carefully consider. There is a tendency each time a new technology pops up that it will solve all the industry problems. It for sure can be leveraged. It for sure will help. But whether that will completely disrupt the traditional industry overnight, for sure it won't. Right? And we will always have to accommodate, I would say, a wide range of client profile and client maturity, which are different. Some of them are willing to invest. Some of them are willing to take that technology jump. Some of them are more traditional and reluctant to change overall.
And as you mentioned, another challenge on top of that is the fractionalization of systems that we're seeing in the industry. A number of firms, a number of institutions are rolling out their own initiatives or working in kind of silos from one another. What more can the industry be doing to kind of ensure greater interoperability? And because the whole thing with DLT is it needs to be interoperable for it to work successfully.
So for me, this is the main reason why, indeed, we have not really seen the DLT initiative at scale being really successful. And I think that the statement that we have, the explanation that we have for this area is, I would say, very close to the one that we have when it comes to the remaining inefficiencies in it's the lack of standardization. It is true that we will never end up to a model where everybody will be on the same platform, sharing the same infrastructure. We would like to, we would love to, but I don't think it's going to happen. But I think that it is really important that we create the necessary standard, the digital standard, along those technologies. Some people will adopt private blockchain. Some of them will go public to leverage on Ethereum programmability, etc., etc. There are all good reasons to choose different paths. But at the end, if you have a model where you issue a digital native securities, you hold it on a custody wallet on a DLT, but then you cannot transfer it somewhere else, it's useless. There is no incentive to do that. I mean, if you cannot use that one, that instrument into a collateral management system, it's irrelevant, right? Yeah. So it's not only that we need to create the interoperability between the different DLT, but we need to create the interoperability between the different business, right? And that could be within the same institution, but that could be also cross-institution. The interoperability is also necessary when you look about the CBDC initiatives that is now emerging in Asia, but also now in Europe. For sure, those currency will be hosted on dedicated blockchain, and there is absolutely the need to connect those blockchain to whatever custody and settlement system we will run on blockchain if you want to enable true DVP transaction on that one. And there are some technical solutions. We are also seeing the emergence of technology that will guarantee, that will create the condition for this interoperability. This is an area where many fintech have also proposed some solutions. So we are carefully also investigating and looking into the potential for that. Because our vision is, rather than building a new platform, is really building an ecosystem where all the different platforms could be leveraged.
Is that something you're seeing at Standard Chartered too?
Yeah, which also explained the earlier point that I said you will see a DLT being more successful, being adopted by the industry if it's also encouraged by the regulators, because that means that I wouldn't say that it becomes a regulation demand, but it becomes a directions, right? Wherein there is no guidance or explicit guidance from the regulations itself, then you really rely on common standards on the horizontal layer by the industry participants to get there. And the next question you ask would be, to what extent will you be self-disrupting yourself out of the industry, out of the ecosystem, or actually you will be taking a leap of faith and gathering a bigger market share, right? So there's always this point that you need to deliberate on to come to a common view before you see the industry moving forward to the next leap itself, whereby things will be a lot more automated towards a single source of truth. Right?